In this episode, I sit down with Joe Gavazza, aka the Ultimate Advisor. We drink a fancy Syrah. We discuss the importance of financial planning and marijuana stocks. You are listening to the Mark Guzman Podcast Experience. Well, today's guest is Joe Gavazza with Gavazza Wealth Management. And I just want to thank you for coming out to do this podcast.
Thanks for having me, Mark.
Yeah, I met you back in 2003 or 4.
Mm-hmm.
You were doing a lot of, you were coming into our office meetings here at the office.
That's right.
And you were doing various talks on financial planning, and you're still a financial planner. In fact, you have your own company now, correct?
Correct. Gavazza Wealth Management. We are a wealth management company. What that basically is understanding and meeting the needs of every individual client. So basically taking every client on individually, figuring out what their goals are, what their dreams are, figuring out where they are at in this point in time and how to get them from A to B essentially.
Yeah. Perfect. So today's wine that we're going to be trying here is a Syrah. It's Millbrant Wahluke Slope, Columbia Valley, 2011. So it's got a pretty cool label.
All right.
It's got a letter K on it. Yeah, so we'll give this a little pour right now and we'll try it.
Maybe a cheers.
Okay, cheers. Yeah. It's not bad.
No, great. I get a lot of fruit on the nose. Dark fruits.
A little bit of chocolate.
Yeah.
Yeah.
Definitely chocolate on the palate. Kind of medium tannin. Doesn't really dry out the mouth, but it's
a lot of people don't like that, heavy tannins. I'm a personal fan of that, but I know my girlfriend Kim, she hates that.
My fiance is she only drinks Pinot Grigio and Sauvignon Blanc, so I totally understand. You gotta.
And recent fiance too, so congratulations by the way.
Thank you very much. Yeah.
When's the wedding date?
May 26, 2018.
Okay, so I assume you're already in full swing of venues and photographers, cakes, all that good stuff.
We've got venue set, DJ set. She's working on the flowers. I've still got to find an officiant, someone to marry us.
Yeah.
And suits and for the groomsmen. Yeah, but we're in full force. I mean, she's out shopping for her wedding dress today. Okay. So
definitely an exciting time.
Yeah, there's a lot to do. We've got a huge Excel spreadsheet on this. A lot of checks, a lot of boxes to check off. So,
is she in financing too?
She's actually in cloud-based sales.
Okay.
So everything that happens on the internet, when you see things that pop up that you've searched before, most recently, if you've searched BMWs, and for the next 3 weeks, you see BMWs kind of popping up.
Yeah.
She helps companies work or gather information on the internet to find people that are searching for a certain product. So,
okay.
Yeah, it's all within the cloud. So
a lot of data there.
Yeah. Yeah. She knows how to do it. So
yeah.
She does a great job.
Yeah, so let's dive right in. And why don't you give us a little bit of background on how you got into this industry of financial planning, why you've been in it for so many years.
Right. I actually took classes in college. I started investing when I was in college. Opened an E-Trade account. If you remember E-Trade.
Yeah.
Opened an E-Trade account. Did a little bit of trading. Had a couple of bucks. It was nothing big, but got really interested in it. And then my whole thought was, I wanted to be a stockbroker and work in New York. And as we all know, September 11th came around just after I graduated from college. And I thought, I like this industry, but I might not want to be at ground zero, type. So I really enjoyed the whole planning process. I got involved with a couple of estate attorneys who referred me out to some business owners that were looking to expand their financial advisory businesses. And I joined a firm. I found a huge value in it just personally because I found that there were a lot of people around me in life that weren't necessarily prepared as much as they could have in life. there was an instance in my life when I was young where my dad passed away, and he was a sole proprietor, business owner. He was doing great, by the way, successful business, but um, developed like leukemia, lymphoma. Things tend to move really fast in life when things are bad sometimes. And the family wasn't really prepared for it. There was no life insurance in place. There was no succession plan. And I thought back, I was like, wow, my mom did a great job raising my sister and I, and we had everything we ever really needed. But I thought, wow, if he had a succession in place, plan in place, if he had done all of these little things that I see from studying financial planning, um, you know, maybe everybody would have been a little bit more comfortable. Um, Not that we didn't do great. My sister's very successful. I consider myself to be very successful. Um, but families do need that help. And sometimes when you don't know what is around the corner or what to prepare for, um, you just don't prepare for it, right?
Yeah.
So it's up to an advisor to really sit down with a client and say, what if? Give them the what if this happens? What if that happens? Are you prepared? Where do you want things to go? What direction to go in? One of the best parts about my job is when I sit across the table from a client and I start bringing up these topics, and people say, we never really thought of that. And that right there, whenever they say that, is just huge value.
Yeah, it's so amazing how many people really don't plan. There's a billboard over on Highway, I think it's 580 in Oakland,
Mhm.
that says we plan more per day in our outfits we're gonna wear as opposed to a lifetime of retirement
Right.
planning.
It's
Yeah,
true.
and I saw that and it really drew up, some questions in my mind, and that's why I wanted to bring you here onto the podcast to discuss it because it's true.
Well, I'm happy you saw that billboard because I'm happy to be here.
Yeah.
Yeah, it's really tough because if you don't know what to plan for, you can't plan for it. And it's up to your wealth advisor, your financial planner, your financial advisor, whoever that person might be, to bring up topics, whether they're happy topics or sad topics, hard topics to talk about, or easy topics. If it's not put out there and kind of and put into your plan, and it could be missed.
Yep.
And I got to tell you, when people hear these questions, they perk up and they say, you know, especially as husband and wife sitting next to each other, it's always one of them. They each want each other to be well off for the rest of their lives.
But no one wants to talk about
Nobody really
death.
wants to talk about it. When they have kids, the children, you have to every parent wants to put their child through college. Every parent wants them to be successful and do well. And things happen,
Yeah.
and you got to be prepared. Whether it's sometimes people become disabled, sometimes people pass away, sometimes people live successful lifestyles, and their children go off and become, I don't know, part of maybe groups that they don't really want them to be a part of. And that's actually a part of the planning process as well. How do I take care of a child that
So they don't go out and waste all the money as soon as they inherit
exactly,
everything. Yeah.
exactly. How do I make sure my child can, if I want to leave anything to that child or any of my children, how do I make it so that they will use it productively?
Yeah.
Or just how do I help them become productive members of society?
Yeah. Yeah.
So,
So you mentioned something a few seconds ago. You mentioned financial advisor, financial planner, and I
mhm,
believe there's a difference between the two, correct?
correct.
What's the difference?
So a financial planner has a certification called it's a CFP, Certified Financial Planner. So there's an actual designation that for that as that title. A financial advisor takes other tests. Sometimes they're both. Sometimes they're one or the other. A financial advisor generally needs to have what they call a Series 65, which is a license. Myself, I have a Series 7, which is a stockbroker's license, a Series 63, which is uniform law and securities. I've got the 65, which is for the financial advisors, and I've got a certified registered or California registered tax preparer as well. which allows me to do the wealth management.
Okay. Is there
All three together or all four
is
together.
there really an advantage one over the other? Like if you're a consumer and you're looking for someone to help you with financial planning.
Sure. So with just recently, some laws have changed where all advisors, all financial advisors have to be fiduciaries. In the past, the CFP was seen more as a fiduciary, more of someone who uh, had to take or had to have best practices in terms of their client. Well, I've never heard of, or I've never been a part of a business or a broker dealer where every single registered rep, which is another title, just an entry level, or financial advisor, or anyone along the line wasn't supposed to take their client's best needs into consideration and do what's best for the client. But recently, the laws have changed. Department of Labor just updated the laws so that we all have to have a fiduciary responsibility now. So it's a little bit maybe less of a gap
Yeah.
because everybody's kind of being held up to the same standards. But um, I do have to say that CFPs have gone through a lot of training, a lot of courses, and when it comes to the education, the formal education, they've got a lot more training than other designations to have as well.
Yeah. Now, for some people out there that may not know the word fiduciary, why don't you just briefly give a definition for that?
Sure. Essentially, it's someone that needs to take uh, the client's best interest
Before their own.
before their own.
Yeah.
Exactly.
Okay.
So, meaning that a lot of times in the past, I'll give an example. People have known to just make transactions for commissions. That's not a bit that can't happen anymore, which is a good thing.
Mhm.
Like if the client is based in a commissionable account, then the only time that a commission can be made is when it's appropriate for the client to actually pay that commission. Other times, it's better just to have a fee-based account. I don't know if that confuses more, but if you
Brings up a few more questions, but I think it
sure,
really depends on everyone's level of risk, who they're comfortable in dealing with, and
exactly.
how they present the package to them.
Right. More commonly, if a client makes a lot of transactions in their account, they're better off going fee based. If the client is a buy and hold investor, then a commission based account not wouldn't be necessarily a bad thing because they're holding the assets in an account where there's not a whole lot of fees being produced if they're buy and hold.
Okay.
But a fee based account actually allows a wealth manager to dial in or sell or buy securities as needed.
Okay. And so when you're dealing with a new client coming in for a consultation, what's one of the very first things you look for, or one of the first questions you start to ask?
First thing I do really is I sit down and listen. Tell me about yourself. Tell me about what you want to do. What do you do now? Where do you want to go? And I start to gather information. It's more important to listen to a client in the first 30 minutes than anything at all because within those 30 minutes, they're going to tell you a lot. And once it's kind of like sitting down and doing an interview like we are right here,
Yeah.
we're just chatting away. And that's the most important thing. There's no real purpose in the first interview except to get and gather information because really what wealth management is understanding and meeting the needs of the client, and those needs for everyone are different. And by the way, every single client is starting out from a different place in life,
Correct.
so there's a different launching pad and there's a different goal for every single person.
Okay. And touching on that, what age should you start really getting involved with a financial planner and managing your wealth? Because one of the big common things I hear all the time is, well, I'm going to wait until I start building assets, or I'm going to wait until I own a second house, or I'm going to wait until I own investments before, they may own a house. I know a few people that own multiple houses and they haven't done anything as far
Right.
as planning, but they feel as if they need to buy stocks before they get involved in financial planning.
Right. To answer your first question, the whole wealth management should start with parents and their children. I mean, day one, start an education plan. That's when it really should start. Every child should have a start in this life with let's start putting money away for the education. When does an individual turn to themselves and say, when do I have to do it for myself? As soon as they're an adult, 18 years old, as early as possible. Get something started. In order to buy a house, you have to have assets. If you're not building those assets, if you're not putting money in away in a savings account, if you're not investing in something for the long term, you're
Even
gonna
a 401k through your work.
oh yeah, 401k. You need to have 6 months of savings. Just in your bank account, you should always have that. I mean, that's where I start. I won't even let people invest money until they have 6 months of their bills, 6 months of their bills in a savings account.
That's smart.
You know, and once those people have some assets, some investments, then I say, okay, put 3 months worth of that money in your bank account into a CD. Let that collect interest because you can pull from some other areas. But whenever there is a time where there's a need, uh, that 6 months worth of savings is huge. That gives people time to pay their rent, pay their mortgage, find a new job, whatever they need to do if they're not receiving income.
And they're not tapping into those investments either.
Exactly. And you have to realize that income is everyone's number one asset. If you don't have income, you don't have anything else. So that's the most important asset anyone ever has is their income.
Yeah.
So
Yeah, cash is king, right?
cash is
You need
king,
that
but
cash coming
if
in
you
every
don't
month.
if you don't have cash coming in, you don't qualify for anything either.
Yeah.
You don't put money towards savings.
Now, what's the demographics for the majority of your clients? Like, do you work with big corporations, small businesses,
Mhm.
maybe individuals that don't own businesses, like mom and pops?
Yeah, I do a little bit of that. Some small businesses. The majority of my clients are between the ages of 25 and 45 these days. Most of them are holding 401
25, huh?
25 and 45.
That's
Yeah.
good.
Yeah. I started a program. A lot of my colleagues have minimum investment limits. And I could never, I really never hopped on board with that. I can't really believe in that if I really want to be involved with people. So I decided that I'd like to work with anybody really at any level, especially starting out the younger folks. The only thing that I require is that they make automatic contributions every month. It's about teaching younger folks to treat their savings, treat their investments as if they were paying their cell phone bill. If you save 100, 200, $300 a month, because we all know our cell phone bills can be 100, $150, $200,
Yeah.
whatever. Um, if you can save that,
Especially when the kids are buying all the apps or the
right,
in-app purchases.
right,
Yeah.
exactly. Just treat it like it's your cell phone bill and put money away every month into a fund. We'll set you up with a portfolio and just every month keep going, keep going. And I came to find out that it's surprising how fast, how quickly these young kids accumulate 25, 50,000, 100,000. So my rule is anyone that comes to me with less than 200,000 to begin with, they've got to start an automatic contribution plan. And a lot of that demographic is, the younger 20-year-old range. A lot of times what we'll do is we'll take over their 401ks at work. We have a long list of um, corporations that allow us to use what's called a brokerage window within their 401k
Okay.
to manage their assets. Until about 7 or 8 years ago, that wasn't possible.
Okay.
And the laws changed on that. So we've really been able to tap into that. And it's been really great for the clients, actually, because Vanguard did a study. And there was a separate study of the 8 largest 401k plans in the country that both came to the conclusion that on average, those investors that use the advisor in their brokerage window in their 401k at work, those investors, those participants average 3% more per year than they would have otherwise. So
Interesting.
if you take a 25-year-old and you compound an additional 3% on top of their returns every year for 30 years, it's quite a significant difference in what their retirement income looks like. So we're really pushing hard on that right now and
Yeah.
just trying to get everyone to saving. It's a little bit tough in San Francisco because you know that it's like the tech capital of the world. And a lot of startups don't provide 401ks, which is unfortunate. So in that case, we try and get people um, contributing to their IRAs and their Roth IRAs.
Yeah, it would be great if they did do that because I know a few restaurant owners in San Francisco, and they'll have tech workers come in, and these are kids in their 20s, and they're literally spending $100 to $200 per person every single night on dinner because they're buying wine, getting cocktails, food, appetizers, the whole deal, and they have the money to afford it, but all that money could be going toward retirement financial planning that would eventually help them because maybe eventually one day the whole tech startup boom is going to level off and it's going to crash,
Absolutely.
just like anything else.
Absolutely. And I actually heard this from us. I was quoted from a CEO from a tech startup the other day. This week, I heard he said, he goes, somebody had asked, "Do you offer a 401k?" And the guy says, "Nobody does that anymore." And I thought, wow, that's a shame because this company may or may not go public, has 20 employees. And if it does go public, it could be 5 or 10 years down the road. And uh, the employer at that point is really um, kind of setting up their employees at a disadvantage. And not only that, but 401ks, if you're worried about turnover, restaurant business, tech business, 401ks are one of the number one things that you can do to retain employees. If people feel like they have a 401k, if the company's kind of contributing, maybe like a safe harbor plan where they match a little bit, um, those employees are a lot more loyal. So it's too bad that a lot of people have that outlook still. But
Yeah. Now, if your company does not offer 401k plans, you can still go out and get your own, correct?
if you're self employed, you can start a 401k, an individual 401k or a solo K. If you're not self employed, um, you do have to go kind of the IRA route, the IRA route, Roth IRA or regular IRA.
Okay.
Yeah.
And what's the difference between those two?
Okay, so the traditional IRA, the regular IRA, is every all the money that you put into that account is tax deductible at the end of the year. So you'll let your accountant know I put $5,000, $5,500 into my IRA. 5,500 is the new maximum for the year. I put that much into my IRA. Traditional 401k or traditional IRA, they get a write off their top line, so you don't pay taxes on that money. With the Roth IRA, it is not tax deductible, but all the earnings in there at retirement can be withdrawn tax free.
Okay.
With the traditional IRA, it's tax deductible up front, but you have to pay taxes on all the earnings down the road. There are a couple other benefits with the Roth IRA, like you can let money sit in there for 5 years and mature, and then you can start withdrawing it without penalty in case you need a couple extra bucks to buy a house or something. The traditional IRA does have an option to pull out $10,000 to purchase a home, um, and there's little differences like that. But the biggest thing is basically how the tax treatment.
Okay. And I know one technique, being in real estate, that uh, some loan officers will recommend is to borrow against your 401k if you have, or some other retirement vehicle, and use that as a down payment for, like, to purchase a property. And then you still have a loan, but you're technically paying yourself back. Do they still have those, or
I,
can you
I
still
I
do that these
believe
days?
that I believe that is still available. Yes, you can
Okay.
do that. Yeah, I believe there's certain things where it has to be tied to real lands and such.
Okay. Okay.
Yeah.
So I know there's a lot of different investment vehicles. Are there any that you completely don't recommend? Like, don't
Actually,
even.
let me back up one second.
Okay.
I don't. You can't borrow from your IRA. You can loan out money. You can't be the. You cannot be the beneficiary of any money that comes out of the IRA. So anything that comes out of the IRA, if it's loaned out, has to be tied to real land, and
Okay.
you have to be at arm's length.
Okay.
Okay, it's just to make
Okay.
that clear.
Okay.
That those types of programs are available, but you really have to look into what the rules are, the IRS regulations are on that because it's a slippery slope. If you're not careful, you can get in big trouble. But that is possible, and I've seen that as well.
Okay. Okay. So the different investment vehicles out there. I mean, there's a ton of things people can invest in,
Mm,
and there's also different variations of everything, right?
mm.
What are some um, investment vehicles that you would absolutely recommend to avoid entirely?
To avoid
Yeah.
entirely.
Or or are there really not anything out there to avoid?
That's a really tough question because, like I said in the beginning, everyone starts from a different place and everyone's going into has different goals. And I'll give you an example. Um, if all things were equal, I would say everyone should put money into their 401k. Everyone should put money into their IRA. Everybody should have certain percentages in each account. Um, there's a commercial on TV that I see quite a bit where a gentleman says, I would never sell an annuity." Okay,
Okay.
but I'll give you an example that generally is not my preference either. But when you have a client, a husband and wife, this happened to me last year. Came across clients that many hundreds of thousands of dollars in their bank account where it's collecting less than 1%. And the husband, all he wants to do is put it in stocks. And the wife was telling me, no way. I remember 2008. I remember 2001. No way. While an annuity many times is frowned upon, if the time horizon is right for the client and they fit the criteria, qualifying criteria, then an annuity can be that middle ground because someone that purchases many of these a fixed annuity, let's say, which is where we put this couple, can take part in a portion of the market swings on the upside, but they are also guaranteed by the insurance company to never lose a dime.
Okay.
So it kind of put the wife at ease. She's like, okay, if anything happens, we'll just get out what we put into it. And in fact, this certain annuity had a minimum 2% interest rate on it, so she'll make at least 2% a year. But the husband was happy, although he's not going to ever see a 12 or 15 or 20% return. They have a participation rate on that increase in market value, so they can go to like 8 or 10% in a given year. So that's the balance, you know. Every vehicle is out there for a reason. And the most important thing is to match up the proper vehicle for the client's needs and to achieve those needs. So I don't know if you have something in mind, but I'm just trying to think of what vehicle out there that I might not put somebody in. I'll tell you, I wouldn't put somebody in an annuity that was 80 years old, and I probably wouldn't put somebody in an annuity that is 20 years old because they have the 80-year-old annuities have our contracts and they have surrender value or surrender penalties.
Okay.
So that person that is in that age category, they need that money today. They can't afford to pay penalties. And that 20-year-old on the other side of that spectrum has so much time to benefit from the increases in the market and whatever else that person invests in, that it's not right to tie it up that way. Only for 401k in those situations that are where funds are designated just for retirement.
The big takeaway from all this for anyone out there, it's good wine, right?
It's opening up,
Yeah.
definitely. I'm getting the fruit.
Yeah. Second pour is always the best.
There you go.
Yeah. So probably the biggest key takeaway is to just start. Just start. If you're not currently investing, if you don't have a financial plan, just start.
Get started.
Yeah.
Exactly. Get started. Talk to somebody. If you don't know, talk to somebody. There are advisors out there that would love to talk to you. Don't be shy. Just say, hey, I want to get started. Lay your cards out on the table. And that person should or get you into a proper program. Sometimes the minimums are like $250 to get into a fund. And that's pretty, I mean, most people can afford that,
Yeah.
you know. But American Funds, for example, it's an excellent mutual fund company. their fund minimum to start is $250.
Yeah. Now, I know, so I do property management and I have a lot of tenants that rent out my units that, oh, yeah, be careful with that. Yeah. So I have a lot of tenants that rent out my properties, but they get paid strictly cash.
Hmm.
And so they think because they get paid in cash, and some also deal only in cash. Like they try to avoid banks as much.
Right.
They keep a lot of the cash in their mattress, that sort of deal. But one thing I've told a few of them is go out there and start looking at different investment vehicles. Have you dealt with people that work like that, just strictly cash? They get paid in cash and everything's handled as cash.
Yeah, that's a tough situation. Unfortunately, after September 11th had a lot of effects on the financial industry and especially in the money laundering area. And most banks won't take, or most financial institutions won't take cash. I can't take a check from any, or I can't take a cash from any client. I can't even take a cashier's check. There has to be proper um, uh,
Like documentation,
there has to be proper
cash has
document.
to be in a
Yeah.
bank account, and
In
yeah,
fact, whenever we sign up a client, uh, we have to get enough information like their passport and all that number, or their driver's license to make sure that uh, they are legitimate U.S. people, and you can be a legitimate U.S. person or here from abroad and still legitimate, but you have to make that money. Kind of, there has to be a paper trail for that money,
yeah,
not in the sense of where it came from in terms of how you earned it, because a lot of people do side jobs and get paid cash.
yeah.
Kids mow lawns, and
So the key is to
put the money in the
deposit,
bank.
yeah, put the money in the bank
Yeah,
and then start from there.
exactly.
Yeah. Yeah, I know a lot of that also changed with the rules in financial lending. If you go out to buy a house, now they want to verify a lot of your down payment or the majority of your down payment, if not all of it, is in the bank for 3 months or 6 months,
Right,
and that's what they call like seasoned funds.
right.
So I assume it's the same with you guys, right?
Yeah, it doesn't even necessarily need to be seasoned. It just
Okay.
needs to come from a bank account, and it has to have your name and address on the account.
Okay.
So we're a little bit more loose, I guess, in that situation. I think a lot of times the lenders want to make sure that it's just not fast money that's coming in and out of the account. In the financial industry, get the money in the bank account, be able to write a check for it, and you should be good.
Okay. Yeah, that's a lot easier than the financial lending world right now for real estate because there are certain laws that they want to put into effect that, and I believe they're doing a trial right now with several title companies within a state. Um, don't quote me on this, but I want to say it's the state of Colorado where they're requiring title companies to verify where actual funds are coming from or where they're derived because apparently a lot of drug dealers, criminals will buy properties, real estate cash, and
Right.
that's how they basically launder their criminal money into legit money by buying real estate.
That is absolutely correct. In fact, we have studies on this once a year that or exams we have to take, and that is one of the ways that it actually happens. We do anti money laundering courses, and that is one of the ways. You're absolutely right. We have to ask our clients where the actual funds came from as well, but it's not as strict. If they say it's from their income, then it's we just check off income.
Yeah.
Um, but it's a lot harder to launder money through the financial system that way than buying a house cash and then uh, going to a broker and refinancing it and pulling it out and making it legitimate money and just kind of getting it into the system. So yeah,
Yeah.
I've definitely heard of that.
I think it was the Financial Executive Summit in Colorado about a year and a half ago,
Mhm.
and that's where they mentioned it, and it was really interesting conference. And of course, a big topic was marijuana
Sure.
and the banks and the federal regulations, where the banks cannot accept any funds from that type of industry
Yeah.
because it's still illegal on a
Still
national level.
federally, yeah.
Yeah. Yeah. So it was really interesting. They had some great speakers and attorneys up there and several banks that want to help, want to jump in, but they're restricted. So it was very interesting to really hear them, discuss all these different laws, and that's where the whole criminals use cash to, or they use it to buy properties cash, and that's how they launder their money.
Wow, so that's really taking effect on the real estate industry as
It
well.
is, yeah, it's very interesting.
Yeah, there's been a huge discussion about this in the finance industry as well. Um, a lot of my clients will say, "We're in California and it's legal in California. Why won't the banks take my money?" And I say, "Well, it's not legal federally. So if that bank CEO or that person from the bank who's a representative, whoever's in charge of that, takes a plane and lands in a state where it's not legal, the feds can come around and just put them in handcuffs."
Yeah.
So and that's why a lot of Wall Street investors aren't investing in those areas yet either, because if you own uh, stock in a company that's doing something illegal, or own a portion of the business, then you land in a state where it's legal, and
So
the
even
feds
as
will.
an investor, you just own stock, let's say in a company, technically, that's
So
possible.
you can own stock, you just can't be a direct investor.
Okay.
So there's a couple of uh, stocks that deal in marijuana that are out
Yeah,
there.
I've seen a few of those,
Yeah,
and I'm curious how those work.
most of those are penny stocks,
Okay.
and very dangerous. There's a few that aren't penny stocks, um, that are considered more pharmaceutical companies in that sense. One that has done really well just in the whole industry is Scott's. The
Yeah.
You can buy it at Home Depot. It's like
Yep.
gardening equipment.
Yep.
Yeah, that's done really well because of the whole trend, because they have containers with
Interesting that all the different side businesses and
right.
industries that
Yeah.
are going to get a big boom off of it.
Oh yeah.
Yeah.
Container shops actually, when the business, the marijuana business has to have containers for their product.
Yeah.
People that own container shops that make containers specifically for that are doing really well.
Yeah. The city of Richmond here, about a year and a half or 2 years ago, they passed um, an ordinance that would allow for commercial growing if you have a minimum size warehouse. And we're talking about 80,000 square feet, 100,000, something of that
Oh, the
size.
small one.
Yeah. But literally, when they passed it that same week, I had maybe 3 or 4 big corporations from New York contact me right away and said, and asking me if I had any warehouses available of that size.
Sure.
Yeah. I mean, there's a lot of corporations that are going to be jumping into this as soon as, and I think eventually the federal government's going to make it fully legal because you have a lot of states jumping on the same bandwagon.
Right. I'm a little bit. I always caution my clients whenever they're trying to make investments in the stock market, though, regarding this area, because I know uh, the tobacco industry is huge,
Yeah.
and they are cash cows, and they pull in so much money every year. Uh, I feel like the moment it is legal federally, they will probably take over the industry.
Yeah. Oh, so you think the cigarette companies are going to jump in?
Absolutely.
Interesting.
They have the agriculture, they have the processes to mass produce,
Distribution. Yeah. Okay.
distribution,
That makes
everything.
sense.
So it's turnkey for them. But for right now, who knows?
Yeah. Yeah. Interesting. So your company also deals with health plans and group health insurance. Is that correct?
Correct.
Okay.
Yeah.
For a small business that wants to offer their employees, some kind of health insurance, what's the way to go about that?
Well, again, it's everything that I do, I have to gather information. So if a client gives me a call and says I want to provide healthcare, then I say great. Um, I just need to know everyone's um, age, their home zip code, male or female, and do they have a spouse and children that want to be on the plan as well. Generally with group um, healthcare or any type of group insurance, um, the hurdles are a lot lower in terms of qualifying. Um, so what we do have to make sure still with group health is that a certain amount of participants in the company will want to participate. So as long as so many employees participate in the group plan, we can get that business qualified. And then what I'll do is I'll take that information and I'll shop that around and I'll present the business owner with all of the quotes, all of the plans. I'll sit down and sometimes we'll choose multiple plans for that company. Sometimes we'll just choose one. It's really up to the business owner to decide and what the comfort level is for that business owner. It's it's a pretty quick process,
Hmm.
but it's all about gathering information, finding out what's available, the costs, the benefit, and getting the business owner to really whatever they like, whatever they want to offer.
Okay. And then your Twitter handle is Ultimate Advisor at
Yes,
Ultimate Advisor.
correct.
Do you have a Facebook business page or a website?
I haven't set up my Facebook business page yet. It's on my short list. I do have a website, www.gavazza.com. That's www.gavazza.com. And there's a couple of other things we'd like to do. Unfortunately, my industry is highly regulated, so it takes time
Yeah.
to get things past attorneys and out there. So things kind of move a little slow in the whole social media um, phase. But right now we're producing a video. I'll send it over to you
Okay.
when I get
Yeah.
a
Yeah.
chance.
Send it to me. I'll share it.
But it's really targeting millennials essentially. It's a 60-minute video. Everything is most advertising is done by videos for the
Yeah.
millennial
Is it
generation.
60 minute?
I'm sorry, 60 seconds. So really quick, hey, here's a couple things to think about and a little bit of information. I won't give you all the ins and outs about it, but it has to do with the 401k campaign. So if it does well, then we'll continue to do more. So it'll be good.
Okay. And then
Yeah.
you're located in the East Bay, what city?
I'm actually located in San Francisco.
Okay.
Yeah.
Oh, you know
Actually,
what? You used to be in
yeah.
Walnut Creek. Okay.
When we met, I was in Walnut Creek. I did move my business out to San Francisco. So right now we're at One Market in the Spear Tower on the
Okay.
36th floor.
Nice.
Yeah, yeah.
You must have good views there.
Great view of the ferry building. Great view of the Bay Bridge.
Yeah.
Yeah, right there on the Embarcadero. So,
One of my favorite restaurants right there is One Market.
oh yeah.
Yeah. That place is really good.
Anytime you're out, give me a ring.
Okay. Whoa. Well, okay. So thank you for coming out. Appreciate it. The wine's just gotten better too. I mean,
Absolutely.
it just smells better and tastes better.
Absolutely.
Yeah.
Yeah, it's really opening up and you get a lot of big fruits. And this is a really good Syrah. I really appreciate it. Thank you, Mark, for
Yeah, of course. I love drinking wine just because if you drink it slowly, it's amazing to see how it progresses and how
Mhm.
it just builds up with every sip.
it's a
It's
living, breathing experience.
Yeah. Yeah, it is.
And I hate to say this, but since you bring that up, it's really just like someone's financial plan. This is why people need advisors because every year, every 6 months, things change. It's a living, breathing experience. And you got to know where to go. It's a moving target.
Yeah.
But wine only gets better with age, and so hopefully
Hopefully the
people's
financial
wealth as
future does too, right?
exactly. Cheers.
Cheers.
We're on the same page.
Yeah. Wine's good. Well,
Mhm.
thanks for coming out, and I appreciate it.
I appreciate you inviting me. Thank you
Yeah.
very much. Cheers.
Thank you again so much for listening to this podcast. I hope it was enjoyable and very informative for you. Definitely go check out that 2011 K Vintners Milbrent Syrah. You can find it for about $50, $60. I highly recommend it. Please, please, please go online, go to Twitter at Ultimate Advisor, and give Joe Gavazza a follow. Give him a retweet, hit him up. Definitely reach out to him with any questions you have. He's very knowledgeable, and which was definitely obvious in the podcast. So, again, thank you for listening. Big shout out to Sam Lubin, my producer, who definitely is working to put this podcast together and help me make this a big success for you guys. Again, thank you. I really, really want to thank all of you for listening. It means the world to me, and I hope today's episode provides you value in your day-to-day life. I created this podcast to help showcase the many great people that live in this world and help share some knowledge that I've learned along the way in life. Again, thank you for listening. Check out our sponsors, and I'll catch you on the next episode.